Hello everyone, welcome back all to this channel. So today we shall continue looking into the sales and distribution process, right? So just to quickly recap, in our earlier session of our macro view, we saw generic business processes right from procurement till sales and distribution, right? We also saw applying the SAP modules or application to each of those business processes along with finance and controlling. So in continuation to the procurement, material management and accounts payable, which we saw during our previous session, today let's see more about the sales and distribution business process, which is tied up to sales and distribution module in SAP and accounts receivable in SAP Finance, right? So let's check the first business process in SAP SD, that is sales inquiry. But before getting into the sales process or sales inquiry, let's quickly check the business model and then come back to the standard sales and distribution business process, right? So just to give you all a quick glimpse about the generic business model which is available, the type of business can be classified as B2B and B2C. B2B is nothing but business to business and B2C is nothing but business to customers, right? And type of customers can also be classified as retail customer, wholesale customer, which can also be called as trade customer, and the POS customers. So B2B is nothing but business to business, which simply means wholesale or large sales, and B2C is nothing but the smaller sales in compared to B2B version, right? So retail piece of it can be considered as B2C, wholesale piece of it or the large trade business piece of it can be connected to B2B model, and POS customers is nothing but a walk-in customer or a one-time customer where they walk into the store and make a purchase and then they just leave out, right? So that's nothing but the POS customers. And the type of business channel is nothing but a phenomena in which you reach your end customers, right? It can be your online sales or offline sales. Offline sales is nothing but your store sales, and online is nothing but your e-com sales, right? So with this context, let's start understanding the first business process in sales and distribution, which is nothing but sales inquiry. So sales inquiry is the first document in SAP SD, which is part of pre-sales business process. Inquiries help us to determine the important sales related data, that is customer, pricing, product catalog, etc. So using this pre-sales information, we can plan, evaluate our marketing and sales strategies, and as a basis of establishing long-term relationship with our customers, say for an example, tracking lost sales, recording pre-sales data to help negotiate with the large contracts, selling goods and services to the large organization that requires like all end-to-end documentation, right? So that's how the inquiry or sales inquiry process comes into picture as the first and the initial process. And some of the standard SAP SD inquiry would generally contains customer details, material specific details, or a product specific details, then pricing details specific to customer and material, delivery dates, delivery quantity, information about shipping, information about billing, etc., right? So all those basic important details would be included in the sales inquiry, and this would be the first initial SAP sales and distribution document. Then once inquiry is made, then comes the next business process, which is nothing but quotation. Quotation is nothing but a legal document to the customer for delivering goods and services. This is normally issued after an inquiry is made by the customer, or it can be issued without even inquiry is made by the customer, right? So just assume you walk into the store, you asked for the quotation of a product or services what you want to purchase or avail. So that quotation is nothing but the detailed document provided by the company. So generally quotation would include or contains all key informations with related to sales organization, distribution channel, division, ship to party, sold to party, purchase order, quantity of material to be dispatched, valid date, etc., right? So we shall discuss about all this things in detail in the micro view of sales and distribution process, right? So that was all about the quotation piece of it. Now coming back to the third business process, it is nothing but the sales order or order confirmation. So sales order is a request made by the customer to the company for delivering some defined quantity of goods or services in a specific time period, right? Generally, creation of sales order would be the first step in SAP SD for capturing the actual sales. So this means customer would be agreeing for certain price and terms and conditions, right, which a company is offering. So this is nothing but the actual confirmation which is received by the customer to the company. Based on that, a sales order would be created, and sales order can be created with reference to the quotation, or it can be created without reference to the quotation as well, right? So sales order or order confirmation generally contains the header information, line item information, and scheduling line item information, right? So scheduling line item information is nothing but all the shipping related details like ship to party, bill to party, payers, date, all those things will be included in the scheduling line item. So header details, line item details, and scheduling line item details, we'll look it in detail in the upcoming sessions when we speak more about the sales and distribution processes in micro view, right? So coming back to the outbound delivery, once sales order or order confirmation is being accepted, outbound delivery will be created. So once the availability of material or the transport scheduling dates are finalized, outbound delivery is created, and it is created with all details relevant to the shipping lines, picking of goods, transportation scheduling, etc. And we can also define shipping point manually or even at the later stage. So some of the checklist points to be carried out in order to create an outbound delivery are to check the material and order to ensure if outbound delivery of goods is possible, to define the quantity of goods and its availability, to calculate the weight or volume of the delivery, to find out a delivery situation and delivery agreement. We should also check the routes to which it has to be dispatched, also picking location, and quality check of material to be delivered, right? So all these details would be included in the outbound delivery, and outbound delivery can be created with reference to the purchase order or sales order, or without reference to any of these predecessor documents, right? So that was all about the outbound delivery. So once outbound delivery is completed, then the picking process will come into picture. Picking is nothing but picking of goods would be done in SAP warehouse management or extended warehouse management. It is done via transfer orders, which is used for picking list and to withdraw the goods from the available stock, right? So there are three types of picking: picking of goods individually, picking as per defined interval, and automatic picking in sales and distribution module of SAP, right? So once picking is completed, then comes the packing process. Packing is nothing but we pack the picked products or goods or articles, right, which is ready for the shipment. So in general, picking and packing is lot more easier when store or warehouse is very small, right? But imagine if warehouse or store is very big, which means it can also run up to more than thousands and thousands of square feet, right? So that's where the several optimized picking and packing processes comes into picture. We shall discuss about this in detail while we go through the extended warehouse management session, right? Okay, so after picking and packing process, then comes the PGI. It's nothing but post goods issue. This is the last step in delivery processing, and in this step, ownership is moved to the customer from the company, where the stock is sent out of the company premises, and once the customer accepts the delivery of the article or material, then stock will be updated as per the delivery. So PGI can be created in the system based on the outbound delivery, picking, packing, right? So that was all about the post goods issue. So once the post goods issue is being posted, then comes the billing or invoicing. In SAP sales and distribution model, billing is the final stage for executing business transactions, where orders are processed and delivery is made. Billing information is available at each stage of order processing, and some of the components of the billing document are it includes invoice creation for delivery of goods and services, it includes pricing details, it includes discounts and rebates, it also also includes credit and debit memos for all returned goods, and also it includes the cancellation of billing document or billing transaction, right? So billing is closely integrated with the organization structure, and it is assigned to sales or distribution channel and division. So we'll discuss in detail about this while we speak through the enterprise structure of sales and distribution. Okay, and billing documents are normally controlled by billing type. It contains generally similar to the sales order. It contains the header details, line item details. So header details would include date of billing, payer identification number, billing value, currency, ship to party, sold to party, pricing elements, etc. And line item details would contain material number, quantity, volume, weight, value of individual items, and it also includes the pricing element of individual items. And billing can be created with or without reference to the sales order or the outbound delivery, right? So that was all about the billing process in sales and distribution in SAP module. So once billing is complete, the last step of sales and distribution module is receipts. So we have receipts. Receipt is the last leg to receive customer payment. The hierarchy of customer payment, that is receipts, can be classified, or it depends on the type of sale, right? So if it is cash on delivery, then it comes towards the end once the goods is being dispatched, once customer accepts the delivery of the article, and then customer makes the payment, right? And then we recognize the revenue. So that is where the receipt or customer payment comes into picture. But generally in other cases, the receipts or customer payment, generally in all the online purchases or even store purchases, customer makes a payment at first, and then the delivery or dispatch would be done based on the requirement, right? So that was all about the receipt. So just to sum it up, all these business processes in short, in crisp, let's assume you walk into the store and make an inquiry about a product or service, right? So that becomes the first step. It's nothing but the sales inquiry process. And then as a customer, you ask for the quotation to compare the best possible price and the quality across, right? So that becomes the next step, where you check for the quotation of a relevant product or services where you intend to make a purchase, right? So then comes the sales order or order creation based on the decision what you have made in order to go ahead and buy or purchase those product or services. Then the sales order or order confirmation would be created with the relevant details. Once the sales order is created, then your picking would come into picture. Picking of those material will be done, packing will be done, then delivery, your courier partner will be assigned, and relevant dispatch of goods from the company premises will be made in order to reach to your doorstep or at your pickup point. And once the goods is being received or delivery is being confirmed, then the revenue will be recognized. It's nothing but passing on the ownership of the goods from the company to the customer, right? So that's where the PGI comes into picture. Once the delivery is being accepted by the customer, then post goods issue will be posted, and then the revenue will be recognized. And then after PGI, billing will be done, and finally once billing is complete, we receive the cash. As I said earlier, it can be received either at the end or at the beginning itself, based on the type of business or sales what we do, right? So this was in short and crisp about the sales and distribution business process. So now let's quickly check the accounting flow of this sales and distribution module, which is also called as order to cash cycle, right? So as soon as the delivery is being made, or a post goods issue is being posted, which means your stock or inventory got reduced, right? So your inventory will be credited, cost of goods sold or cost of sales will be debited. And once the billing kicks in, once we are ready to make the billing, customer account, the respective customer account will be debited and the sales account will be credited. So with respect to receipt, once we receive the amount from the customer, incoming receipt account will be debited and customer account will be credited, because customer is paying us. Since customer is paying us, he will be credited, and the incoming receipt or relevant tender account will be debited. So coming back to the bank reconciliation statement, bank check-in account will be debited and incoming receipt account will be credited. If you notice at this point of time, your debit customer and credit customer will be knocked off at the time of receipts. So the open accounts would be incoming receipt will be debited and sales account would be credited, right? So with respect to the bank reconciliation statement, as soon as the BRS comes in, the bank check-in account would be debited and the incoming receipt would be credited. So here your debit incoming receipt and credit incoming receipt would be knocked off, and finally your main bank account will be debited and bank check-in account would be credited. Your bank check-in account debit entry and the bank check-in account credit entry will be knocked off, and finally your main bank account debit, what we have received the amount from the customer will be debited and the sales will be credited. Sales will be your P&L account and bank will be your balance sheet account, right? So this was all about the accounting process and accounting entries with respect to order to cash cycle, right? So that's it for today. In the next session, let's check about the production planning process. Thank you all for watching the video. Please do like, share and subscribe. Thank you all once again. So coming back to the accounting entries of sales and distribution, which is called as order to cash cycle as well. So the first entry would be delivery, that is cost of goods sold account debit and inventory account credit. Inventory, since the stock or inventory is getting reduced, will credit the inventory, and sales or cost of goods sold or cost of sales will be debited. And the very next step would be billing. In billing, we will debit the customer and credit the sales. So at this point of time, my debit sales or cost of goods sold or cost of sales will be knocked off against my credit sales at the billing stage. And then once the receipts comes in, cash receipt or customer payment, incoming receipt account would be debited and customer account would be credited. So at this point of time, my customer gets knocked off, debit customer and credit customer gets knocked off. Now the incoming receipt account debit and the inventory account credit will be open. Now once the BRS entry or bank reconciliation entry comes in, the bank check-in account would be debited and incoming receipts account would be credited. At this point of time, my incoming receipts gets knocked off, and finally when my main bank account would be debited and bank check-in account would be credited, my bank check-in account would be knocked off, and at the final entry, my main bank account debit, which is I'm receiving cash from the customer. Since my cash balance is going up, my main bank account would be debited, and since my inventory or stock is coming down, it is credited. So the end result of all this O2C or order to cash cycle entry would be debit bank account and credit inventory or stock account, right? So if you also notice my accounting impact, right? So accounting impact would be created only after my delivery comes into picture, that is post goods issue. Until post goods issue, it is purely a sales and distribution process. But once after the delivery is confirmed, once the goods move out of the premises of the company and customer accepts the goods, then once post goods issue is posted, then my delivery journal entry will be posted. Likewise, billing, receipts and reconciliation statement would be posted, right? So this was all about the order to cash cycle journal entry.